Welcome to Quick Study. I'm Sarah Borgeson-Keeter with REIT.com, here with Brad Case, NAREIT Senior Vice President for Research and Industry Information. So Brad, we saw a bit of a setback in the REIT sector during September. How did that fit in with the rest of the market?
Well, yeah, it was a difficult month really for all investors. REIT investors saw their returns go down by 5.6% on the month. But really there was no place to hide last month in investing. Domestic large cap stocks went down, domestic small cap stocks went down, foreign stocks went down, domestic bonds lost money, foreign bonds lost even more. So it was a month that was tough for everybody. It was not restricted just to the REIT market or to particular types of stocks or particular types of assets. It was really across the board. If you look at the performance since the beginning of the year, of course, REITs have provided much greater returns than other investments. I mean, REITs are up more than 13% on the year, whereas large cap stocks have gained only 8.3% for the year, and small cap stocks have actually lost 4.4% on the year. So certainly REIT investors weren't happy about what happened in September, but they've certainly been happy about what's happening over the longer historical periods.
And were interest rates playing a factor in September's decline?
That is a possibility. I can't really tell. That's certainly what some people in the market are saying. But I think if you look at the longer historical period of the response of REIT returns to interest rate movements, usually REIT returns are positive when interest rates are going up. And the reason for that is that what drives REIT earnings is not the level or the change in interest rates, but what's happening to real estate fundamentals, to occupancy rates, to rent growth. And certainly what we're seeing is the Federal Reserve Board is saying we're seeing signs of strength in the economy, and if that continues, we will allow interest rates to continue going up. And interest rates are bound to go up because when the economy strengthens, people have greater demand for capital, for investments. So I do expect interest rates to rise as the economy strengthens, but there's no reason that should be bad news for REIT investors.
And what sectors were the most resilient in September?
Well, as I said, investors really lost money during September in all assets, domestically and foreign. And that was certainly true in the REIT market. If you look at the best performing sector of the REIT market, it was infrastructure REITs. But even they lost 2% during September. If you look at the worst performing sector during September, that was residential REITs that own manufactured home communities and apartment communities and student housing communities and the like. They lost 7% during the month of September. But on a longer term basis, investors weren't sorry to be in either infrastructure or residential REITs. Infrastructure REITs have returned nearly 17% during 2014 as a whole. Residential REITs have returned more than 20%. So it's been a very strong year, and in fact, if you look more broadly, it's very typical to have negative months during a long real estate bull market. In fact, during bull markets, what we've seen historically is about 1 of every 3 months is a negative month. And yet, the current bull market has been going 5.5 years so far, and REIT investors have seen returns averaging nearly 27% per year over those 5.5 years, and the normal real estate bull market that we've seen historically has been more like 15 years. So there's no particular reason to think that real estate investors have seen the top of this bull market. And while they may continue to see, they're likely to continue to see individual down months, I don't think there's any reason to think that the party is over in real estate.
Thanks very much, Brad.
It's my pleasure.
And for more news and analysis on all things REIT, please visit REIT.com.